Hello everyone, it's Mark and I'm going to look at the Nifty 50, the Indian stock market. So what happened the other day is we had this setup where it was like an island top. So it quickly gapped up and then went sideways a little bit at these levels here at about 2196, 2197, 2197, and then it had a huge gap down where it was down significantly in the overnight session, and then it opened up a lot lower and finished green on the day, but the damage was already done on that gap down, so it had a nice little uptrend going there that it totally just broke through, and then but the setup there is the what they call an island top, and sometimes it can be just one candle or in a candlestick. These candlesticks are representative of one day of trading, so it's just one session on the stock exchange, on the stock market. So it's this really long candle there, that long green one, that's just one day. So it opened up at the low there, and then it finished at the high of the candle, so it made a green candle. But if you're interested in candlesticks, I recommend like Steve Neeson's kind of the fundamentals on candlesticks, kind of that's like the reference material for candlesticks is Steve Neeson, and that's a really old book, but you can pretty much learn the gist of it from the internet now, or pretty much anywhere. Just because the candlesticks aren't that complicated, so it's pretty easy to pick up. Just sort of like doing a search on, Perplexity or Google or something. So back to this chart here. So we had that gap down, which it's pretty close to confirming the island top. But if you look at down here, that break was pretty significant where it broke down below these previous levels here. So when we look at the long-term chart, right? So the long-term chart, it just goes straight up, and all the little dips get quickly bought up. So it's kind of it's just a really strong chart. Like there's a lot of optimism and strong sentiment. And when I noticed that, I thought sometimes you see that with a manic market where people are just buying for the sake of buying, and you're just chasing, and there's not really any value. But there aren't that many companies, that comprise the Nifty. So, and a lot of them, I looked at them, they're pretty much, really stable companies. They're not super cyclical or anything. Like there's a lot of healthcare and stuff like that in the top 20. So it's not like you can see with say like the U.S. market back in like a possible top. There's not a lot of unprofitable tech companies or anything like that. But when it went down below here, that day that it went down right here on 118 on the 18th of January, where it gapped down again, and that took out that support level there. So the support level was broken, so it's another low. So it's too early to call this a breakdown on the chart where the momentum's gone, because to have momentum you have to keep making the highs, have to keep going up, obviously it has to keep going higher, and then the lows can't be broken. So you can't really see on this chart, but if this level gets taken out again, if let's see if I can get near the exact level. It's right about, let's see, it's 21.29, about 21 290. Looks like the low there was lower. It was about, yeah, if we start hitting 21 280s, that's pretty much going to get taken out there. So and it looks like it was trying to really get some momentum off that low there, because it was up the next day, but it's starting to fade out. Like today's session was red, or yesterday's session, so it's a different time in India now, so the market's going to open eventually, but the previous session was red again, and it's really got to hold the next couple days to keep. It's got to hold this level here, these 21,470, or yeah, about the 21 at the bottom here. So it's actually 21,467 area is the key area, and that might have been an overshoot. So I think the real support's more like 21,510, 21,500, but the rock bottom is the 21,460, 21,467, something like that. So, but that is basically this line right here. If you can see that bottom line, if that gets taken out again tomorrow on a gap down or something, it's not good. Because like what happens is if this low is taken out again here, these lows right here on the 18th, if that low is taken out on the 18th, then this island top signal is confirmed, because to be a confirmation, you have to see price go below the next technical level, or like on a possible top, it would be below the next low, like the next flag. So that's kind of a possible bull flag it's trying to do, because when it came down, it's just sold off, but it's still got the momentum it's had for the past year. So it's more than likely to hold, but the island top is still a possibility if we do go below that 118, the January 18th low, which is pretty far down there from here. But it's more likely if we take out this level there, like the 21,500, then it's going to get there. It could just go sideways too. It may just have it be in a trading range where it just goes sideways for a while, because it's been up a lot the past 6 months or so, or the past few months. So it'd be really good for it just to kind of go sideways and rest here, because consolidations are good, because you don't want to see it go straight up for too long, because then it could crash, which I don't think it's going to be the case. I don't think it's going to be like a long-term top, because I was looking at the fundamentals, and the fundamentals if you look at the PE ratios, like I was looking at if we look at the historical price to earnings chart, so the price to earnings is just the price over the earnings. So it's like the most common valuation metric, or one of the most common ones, and it's pretty good to get an overview. So it's kind of right at the midpoint of its historical average. It's not, back in 2021 it was all the way up to like 30, it was over 30, so that's kind of high, for a country's PE ratio. So the fact that it's about 20 right now doesn't seem to be super. It's obviously not overvalued fundamental wise, because if it was like a super overvalued, it would be like 30 or 40 or 50, like like a lot of emerging markets a long time ago, they would, if it was over 30, there's pretty good chance that it's overvalued. But I don't see any problem with the valuations here, at least historically. And of course, what matters most is going forward, so the growth. So I think the world's done a pretty good job, at least overall, of like taming the inflation, and the part of that goes to the United States doing a pretty good job of stopping the runaway inflation without much too much economic damage. There's like a little bit of a banking panic, but it was pretty short-lived and wasn't really systemic. So it looks pretty good out there, overall. And I do track a lot of other countries' stock markets too. And a long time ago, you used to see them all run together. So if the United States market was up, you'd see China's market be up too. But now it's not the case, and I guess that's really a good thing. I was thinking about today is, the United States doesn't really need China anymore, at least their stock market to go up at the same time, and they used to be the case, they were all trending together. But, the PE ratio is it's a pretty good ballpark figure just to look at, and it's about in line with the United States. The United States PE multiples are about the same, the S&P 500 on the large companies in the United States. So it's nothing really crazy there, nothing to get excited about. And but I still think that top there could be a short-term top here where I think it's more likely it's going to go sideways or down from here, just based on the island top that seems to be developing. And if it fails, like if this island top, if the Nifty keeps going up here, goes over 22,000, 23,000 again, then it's going to go a lot more, I'm sure, because that was like a reversal right there it was trying to do. So that would be like a failed signal, where the signal to the market was that was the top here, but if it goes above it, then that signal is negated. So it's all about the signals and the sentiment in the market. So yeah, I can't say it's at a point where it's about to crash or it's gonna not go sideways. I think it's more likely just to go sideways or have a sell-off here, down to the next support levels. So it's just been up a lot the past year, and yeah, I think it's time for a correction, maybe down to 20,000. I think 20,200 is a pretty healthy level to come down to. Or actually, 20,250 is a big level there, and it'd be nice if it came down to that, because it sure has been up a lot pretty quickly here. I didn't look at this long-term chart until just now, and it sure is up a lot. It's up over 100% since 2019. So that's a lot, but that's a good thing, and it looks like the valuations are catching up. So, but I still think, it'd be really healthy, and I think it's due a pullback to 2050 or 2250, but that may or may not happen. But the way these candles are looking, like, that's a bearish engulfing candle here on this weekly too. So yeah, when you look at it on the weekly chart, see that red candle, it just went below that one. So that's what we call a bearish engulfing candle. And I was trying to see if it's done that, if that was a good read for it. Yeah, see, it did it back there. It did a bearish engulfing candle off of the breakout. And that was a real failed signal there. So yeah, it looks like it's ready to pull back, is my take here. So I think it's going to come down to at least at 250. But it may or may not do that, but that's just what it looks like it's going to do based on the chart and the candlesticks. So that's kind of the sentiment too. The sentiment seems to be shifting. So yeah, that's about all I had to say about the Nifty. like I was saying, I do track some other markets too, and they've been pulling back. They pulled back a lot the past few months. Like Vietnam was one of the strongest economies in the world, and they've had a significant pullback in the past several months. They're back down to this long-term support level that I found. So it's back on this. It's been a really big support level for a couple years, but it's still holding though. It's still holding support, so it's still uptrending. So nothing crazy there, but I'd like to see it do better because it's a pretty important country in Asia now. And Turkey was a leader too. It's down. I think that had something to do with the war maybe too, with the Middle East conflict. So that's kind of is what it is. And the UAE is the same. United Arab Emirates. It's actually come back a lot. The UAE was one of the only ones that was up back in September and October, and it just couldn't hold on. I think it was with the conflict in the Middle East too, but who knows? But that's my thoughts on it. But a lot of things that just kind of pull back, and of course, like Japan was doing pretty good, and Europe's not really that great, but Brazil was good too. Like I've kind of been following all the kind of the high growth emerging markets, like the high growth ones, and the ones that should be growing if the world's growing. The world economy's in good shape, and they're all still holding in pretty well. I mean, this one's still holding in there, but this ETF doesn't actually track it right. Like it's actually a lot higher than this, but this ETF's back in the trading range. But the Brazilian market's doing pretty well too. So yeah, that's all I had to say about India and the stock market and Nifty. So I hope that was helpful, and I'll do more videos if I see anything emerge here. I'm going to be watching the Nifty pretty closely the next couple weeks to see if we do hold those levels. So I'll catch you in the next one.